Hi everyone, this is Mrs. V Chan. Welcome to my Form 5 Accounting Lesson number 18. Today is 4th of May 2020. We will do one DSE question in 2012, question number 9. However, there are two topics in this question, which are limited company and correction of errors. Alright, and here is the question. We are given the trial balance. However, we have something out of syllabus. But if you delete this $2 and then share premium, and then you move this share premium 319,000, let's say, to any of the figure on the credit side. For example, this is the figure for trade payables. So you just move this add to trade payables, and this is the adjusted figure for trade payables. Then we can still practice this question. All right. And also, you go to point number 2, and then you delete this, which is out of syllabus. Authorized share capital, blah blah blah. Okay, and then remove this on the same dates. Okay, just ignore this, then we can still practice the question, and also delete these $2 each. Okay, all right, and after that, let's look at the things we have to do in part A here. The first one, we have to prepare journal entries to correct the errors, and after that, we need to show statement of financial position for this company. Okay, and therefore here is what we have, part A. So this is the journal entries that we have to show to correct the mistake, part A. And then part B, okay, the statement of financial position, we always start with a nice heading, the name of the limited company, and then the first half we have total assets, and this is the key answer, and see whether we can get the key answer later on or not. Okay, and also, since this is limited company, we change capital to equity, and here is equity. We have these three things: ordinary shares capital, general reserve, retained profits, and also, okay, the final total here, we have total equity and liabilities. Now we are going to look at the question and do things step by step. Okay, so we look at point number 1 here. Given that the management of the company decided to provide allowance for doubtful debts starting from this year 2011, and then an allowance of 5% on outstanding trade receivables should be provided for the year end, but no entries have been made in the books. So obviously this is error of omission. And then let's check. If you go through this trial balance, you don't see any allowance for doubtful debts, so therefore now we have to provide allowance for doubtful debts, which is 5% on trade receivable. Okay, this is my rough work. So what is a double entry to provide allowance on doubtful debts? So the double entry is debit profit and loss account as usual, and then we credit allowance for doubtful debts. So since this is my workings only, so it's okay that I write abbreviation. So that will be 5% times trade receivable. Now I need trade receivable from the trial balance, 716,400. So the error should be, I get a calculator, so the error should be 716,400 times 0.05. Okay, so the amount should be 35,820. Okay, so this is only my rough work. However, something very, very important. So now, when you look at the information given to us, okay, so what is profit and loss account? Where is profit and loss account? So, which is here, right? So therefore it is very, very important. Okay, and then I show you this. What is meaning of this retained profit as at 31st December 2011? That means if we analyze the situation in the income statement, we have the first part for trading, and then profit and loss account, we have net profits. Okay, and here we have profit and loss appropriation account, and then we get this retained profit for the year, and we add the opening retained profit, and then we will get this retained profit carry forward, and which is exactly same as this 996,500. Okay, so If your answer is to debit profit and loss account, so then your answer would be wrong, because the question, the information given to us, we don't have profit and loss, right? Where's profit and loss? Actually, all profit and loss being included in here, retained profit. So where is the mistake? This figure has mistake. So therefore, we must change the answer to this. We don't debit profit and loss. However, it should be the retained profit instead. And then we credit allowance for doubtful debts account in that way. Okay, and then I show my workings again. 5% times trade receivable. Where's my working just now? Okay, so 716,400. Okay, so and the amount should be 35,820, 35,820. So this is very, very important. So where is profit and loss now, which is included in retained profits? Okay, so the mistake is in which account, which is related to retained profits. So therefore, the account must be retained profits. Okay, so right after this double entry, I need to make adjustments in part B. So this is debit retained profits. So here is my working for all the adjustments affecting retained profit. I start with the figure given to us in the trial balance. And now debit means negative. So I minus 35,820. Okay, and after that, credit allowance. So in the statement of financial position, okay, so this is current assets. We have the trade receivable minus 35,820. So we can simply give the net figure for trade receivable in that way. Okay, so after that, we can go to point number 2. Okay, so now we come to point number 2, saying that to finance the expansion of the business. So whenever there is expansion, we need money. So that how do we get money? So that is by issuing shares. This is to issue 600,000 number of ordinary shares have been issued at $6 each, and that all monies subscribed have been received and shares have been allotted on 28 December. So we don't have any problem about oversubscription and all things being settled. However, no entries have been made in the books. Again, here we have error of omission. So that what we need to do is to write down the double entry for issuing shares. So here I can go to my answer. The purpose for issuing shares is to get money so that we debit cash at bank. Okay, and then we credit ordinary share capital. Okay, so how many number of shares? 600 number of shares here. Number of shares, no dollar sign, times how much each? So $6 each. So therefore I have this times 6. So altogether I have 3. So 3.6 million. So this is error of omission. Therefore, I need to go to statement of financial position. Okay, so where's my statement of financial position? Since I still have some other adjustment affecting cash at bank, so I start with the original figure for cash at bank. So which is here, cash at bank, this 760,800, and then plus. Okay, this is my workings. All right, and then credit ordinary share capital. So I can go to my statement of financial position. Okay, here I have ordinary share capital. Okay, start with the original figure, which is here. I show you here original figure, which is 4 million. Okay, now plus 3.6 million. Okay, so plus 4 million. Yes. So this is after omission of point number 2. Okay, so next we come to point number 3, and which is the most difficult point in this question. All right, so we are given this. On 1st December 2011, a 5-year 2% debenture of 900,000 in total had been issued at par. Now I need to explain to you what is the meaning of issued at par. Here is my diagram. So issued at par, same as at the nominal value. And what is nominal value? Same as face value. So here I draw you a stamp. Okay, you have to use your imagination. And then this is a crown. All right, and this here is $1. Okay, so before 1997, so how much you need to pay for buying this stamp, which is $1. So this $1 actually is the face value, and the technical term for face value is same as nominal value. However, many years later, if you still want to buy this stamp, I don't think you pay $1. Okay, so you may need to pay 100 times more, maybe 1,000 times more, depends on demand and supply. Okay, but anyway, this is $1 in 1997. Before 1997, we pay $1 to buy the stamp, and this $1 is the nominal value, and then issued at par means same as the nominal value. Okay. Okay, now we come to this point, saying that debenture interest is payable on 31st March and 30th September each year, and all money subscribed that were duly collected means we have money collected, and then this is a 5-year 2% debenture. All right, so here is the timeline. I draw you timeline here. Okay, the date is very important. Okay, so the purpose for issuing debentures is to get money so that we debit cash at bank at par. This is the nominal value. And then we credit 2% debentures, and this 2% means interest. Since this is 5-year 2% debentures, so the classification will be a kind of non-current liability. Okay, and look at the date here. This is about interest. Okay, since the date for interest mentioned here is on March here, and then December, sorry, this is September, so this is December, so that nothing to do with March and September. That means for this period we have debenture which is not yet paid, so the double entry, debit profit and loss, and credit accrued interest, or you can say this is the kind of interest payable. All right, so how do we calculate that? We borrow this 900,000 times the rate is 2%, and something very important, the timeline is so important, only 1 month. Okay, so that the calculation will be this 0.02 and then divided by 12, so I will have 1,500 and also 1,500. And also there is another part in this question. Okay, so in order to obtain the cash discount of 4% from a supplier, 1/4 of the monies collected was used to pay the supplier during the period. And anyway, this point is about all the above transactions were omitted from the books, so I just keep writing another double entry. Okay, so here is another double entry. So 1/4 of the money received. Okay, so that I credit cash at bank 1/4. So 1/4 of 900,000. So 900,000 divided by 4. So this is 225. The purpose for paying money is to settle supplier, and supply is trade payable. But something very important. Okay, so when we pay, we don't pay 100% because we can enjoy this 4%, which is discounts received it. So that this is 4%, so this is equivalent to 96%. Okay, so how much is this trade payable? Then you need to start with this 225,000 divided by 0.96. So I have this 234,375. Okay, times 4% for discount received it 9375. Okay, I think in this point number 3, this is transaction being omitted. So how many transactions we need altogether? So that will be number 1 here, and number 2 here, and number 3 here. Okay, so this is only the rough watch. When you show your answer in your answer book, we need to do adjustments. So here, point number 3, we need to do adjustments. So the first one, I simply copy this one. So debit cash at bank, and then credit 2%, 2%, write it nicely, 2% debentures, which is at par, means same as the nominal value. Okay, and then the second one omitted is this interest payable, but something so important here, because in this question, this is not profit and loss. If you put profit and loss, that would be wrong. So where's the mistake? Profit and loss being included in retain the profit. So I have to change this to retain the profit, otherwise it would be all wrong. Okay, and credit accrued, okay, interests. Okay, and shows that 2%, and timeline is very important, only 1 month, so 1,500, 1,500. Okay, and here is another double entry. However, where is discount received? Where is discount received? I have no ink here. Okay, forget it, I use this. So where is discount received? Also retained profits. Okay, so that will be debit trade payable 4,375. I just copy, and credit cash at bank, which is 5,000, and no discount received. Discount received being included as retained profits. So this is full. Okay, so right after I have this answer in part A, so debit cash at bank here and credit cash at bank, I need to show adjustments right away. So here is my workings for cash at bank. Now here, debit cash at bank plus this figure, and then later on credit cash at bank, so minus 5,000. Okay, and then what is this 2% debentures? It will be kind of non-current liability, so that here, non-current liability in statement of financial position, I have this 2% debentures. Okay, and then I have this debit retained profit, so therefore I go to my workings. We already have some of the figures before, so if we debit profit and retain the profit, so we minus 1,500 for interests, and then here again we also credit retained profit for discount received, so here is plus 9,375. So this is what? This is discounts received, and this is interests, like that. Okay, what else is it? So the effects, so what's left, and then accrued interest is a kind of current liability. So here I have my accrued debenture interest 1,500, and also trade payable debit 4,375. Okay, so here we minus 4,375 from trade payable. Okay, so that's all about point number 3. Okay. Next, we have point number 4, saying that a piece of equipment with both cost and accumulated depreciation of the amount here was sold for this much on the same date. Therefore, what happened? We have disposal, and then the transaction was recorded in the books as cash sales. Again, we do it step by step to analyze. Okay, so here is the timeline, the date for disposal. Remember, we always have 4 steps for disposal. The first one, we cancel equipment, so I credit equipment, which is 7 to 6,000, and step 2, I cancel accumulated depreciation, so same amount. So obviously when you have same amount for these 2 figures, it means it is fully depreciated, but we still receive money. So debit cash at bank, and according to this information, which is 156,000. So 156,000. Okay, and I insert this on credit side. and this is credit, so we have profits on disposal. Okay, so this is correct entry that we have to do. However, what's wrong? Wrong entry. Okay, so therefore, what is the wrong entry? So the transaction was recorded in the books as cash sales of 165. Cash sales of 165. The firm has debit cash at bank for 165,000. This is wrong. Okay, and credit sales also 165, which is also wrong. Okay, by combining this together, we can work out the answer. Okay, so here is the answer to show step by step. Okay, now I need to debit accumulated depreciation being omitted and credit equipment this for being omitted. Okay, so that would be accumulated depreciation, which is 726,000 omitted. And then what else is omitted? I need to credit equipment, which is being omitted. Okay, now I check. So how much we have to debit cash account? We should debit 156, but now the debit side is too large. Okay, I go to credit side, cash at bank, which is the difference, 165,000 minus 156,000, because the debit side is too large. Okay, I will have 165 minus 156,000, so which is 9,000. Okay, what is the remaining thing? So I have done this. I have done cash at bank, and then I have done equipment. So anyway, for this sales and for this profit, which is affecting what? Which affecting the income statement, so that would be the retained profit. I don't need to worry about that. I just check. So which side is smaller? This side is smaller by 9,000. Okay, I simply adjust this in the retained profits account. So this is the answer. Okay, let's double check. So this is debit retained profit, the key answer, the final answer by 9,000. Okay, now what we need to do for this sales, we need to cancel. So therefore we need to debit sales by 165. This is what we need to cancel. And then for this profit on disposal, omitted, so we need to credit this profit by 156. Is that right? Okay, so if you put them together, so you will see the debit side is bigger than the credit side by 165 minus 156 by 9,000. So these two items affecting retained profit. So you can see we also get automatically the retained profit figure by 9,000. Okay, so that therefore the step will be you cancel accumulated depreciation, you cancel equipment, and then you adjust cash at bank, and you insert on smaller side 9,000 in the retained profit account, and automatically you will get the correction of error by canceling sales and profit, by putting them all together to get the net result in the retained profit accounts. So next, after this correction of errors, we need to look at the effects on statement of financial position. But anyway, this accumulated depreciation debit, and then we credit with the same amount. Actually, this fully depreciated equipment has no effect. So simply speaking, I just go to this property, plant, and equipment in the statement of financial position. We just put cost minus accumulated depreciation to get this figure, because fully depreciated actually has no effect on this. All right, and next, so in the retained profit, we need to minus 9,000, and then for cash at bank, since this is credit, we need to also minus 9,000. Okay, so in our workings, cash at bank we minus 9,000, and then retained profit we also minus 9,000. So point number 5 is a straightforward one. On 31st December, the Board of Directors resolved to transfer 135 to the General Reserve and no entries have been made. Now we need to make the double entry. So in the normal situation, the double entry for transferring to reserve is to debit profit and loss appropriation. Okay, but here if you write profit and loss appropriation, it will be wrong. Okay, so you must change this to retain the profit. So therefore the answer to number 5. So you debit retain the profit instead, and then you credit general reserve. Okay, so what is the effect on part B, part number 2? So debit retain the profits. So the workings for retain the profits, you minus 135,000, and then what about this general reserve created, which is part of equity, part of shareholders fund, so that we have this general reserve 135,000 being created. But remember, this is important. You have to change profit and loss appropriation to retain the profits in this question. Okay, now we come to the final points. So we have this advertising expenditure amounted to 424,800 have been incurred and paid. So don't worry about the remaining sentence. Let's look at the correct treatment for advertising. So advertising paid and incurred should be always expense in the profit and loss account, because according to prudence concept, no one can prove the amounts you spent can bring benefits to the business, can bring sales, because we have no evidence to prove that. Okay, so therefore the treatment for advertisement should be always expense in the profit and loss account. All right, because the benefits is not certain. Okay, and now look at the accounting treatment done here. The company estimated that the sales volume could be increased, so we cannot prove the sales volume can be increased. Okay, and what is the double entry done here? The bookkeeper therefore record the payment for advertisement as prepayment. No, this is wrong. So therefore, if you go back to trial balance, you can see the wrong thing here. Recorded as prepayment. No, because according to prudence concept, it should be always a kind of expense in the profit and loss account. So therefore, how should we adjust the wrong treatment done here? And that will be to cancel the prepayments. Cancel prepayments. So credit prepayments. So here, so therefore we shouldn't have any this prepayment in the statement of financial position by 424,800, and this 424,800 should be always a kind of expense in the income statement, and the related account should be retained profits. Okay, therefore I go to retained profits, workings. I need to minus 424 for advertisements and no more, and then credit prepayment. That means in the statement of financial position we have this deleted, no effects. All right, so finally for this related question, comments on the accounting treatment of advertising expenditure, so that here we have the answer. So advertisement should not be treated as prepayments because it should be charged in the profit and loss account as expense. Okay, and uncertain revenue recognition, and you can name accounting concept here, which is prudence concept, that we always treat advertisements as a kind of expense in the profit and loss account. Okay, so finally we can close everything. This is the working for showing cash at bank. You use your calculator, you get this 5,026,800, so that you go to your statement of financial position, you have this. And then for inventory, since there is no adjustments, you simply copy from the trial balance. And now you can close and use your calculator to work out the adjusted retained profit, and it's 399,755. So that here is retained profit 399,755. Okay, and you can get this, the first part, use your calculator. We get the total assets here, these amounts, and equity and liabilities, so also the same. Okay, so we can make the statement of financial position being balanced. All right, so that's all about this question. In 2012 limited company and correction of error. So thank you for watching my video. I'll see you next time. Bye bye.